Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in plain sight. And today we're diving into a company that's really taken a nosedive. Buckle up because this one's a wild ride. So TPI Composites, a company that makes parts for wind turbines, has just filed a report that's basically screaming distress signals. They've voluntarily filed for Chapter 11 bankruptcy protection. Think of this as a big formal declaration that they can't pay their debts and need a structured way to try and fix things. This report, a Form 8K, is like a company's urgent bulletin to the public. It's for signaling major events as they happen. And yes, filing for bankruptcy is about as major as it gets. The core of this filing confirms what we're starting to see with many companies lately. TPI Composites, along with some of its related companies, has officially entered Chapter 11 bankruptcy. This happened in Texas. The document essentially says they've alerted everyone that they are now under the supervision of the bankruptcy court to try and sort out their financial mess. Now, here's the really crucial part for anyone holding TPI stock. This is the company directly telling investors to brace for impact. They're saying that owning their stock right now is like playing a very risky lottery. The stock price probably has no real connection to what investors might actually get back, if anything. And here's the gut punch. They expect current shareholders to get absolutely nothing. Not only that, but their stock is likely to be kicked off the Nasdaq Stock Exchange, the big league, and will end up on the much lower tier over-the-counter market. You can basically kiss your investment goodbye if you're holding their shares. They are strongly advising against putting any more money into the company. This situation isn't happening in a vacuum. TPI Composites makes large composite parts, often for wind turbine blades. The market for renewable energy, especially wind power, has been growing. However, many companies in this sector have faced significant challenges with supply chain issues, rising costs, and intense competition. It seems TPI Composites has struggled to navigate these choppy waters, leading them to this severe financial reckoning. Looking at the details, their common stock is registered on the Nasdaq Global Market under the ticker TPIC. This is important because being delisted means a loss of liquidity and generally a significant drop in investor interest and share value. The company is outlining a whole host of risks associated with this bankruptcy. One of the big ones is getting court approval for necessary actions, like something called DIP financing. DIP financing is essentially new crucial money that a company in bankruptcy can borrow, but it needs the court's okay. If they can't get that, their ability to operate and restructure is severely hampered. Another major issue is the sheer cost of bankruptcy itself. Legal fees, consulting fees, accounting fees, these all add up astronomically fast and drain the company's limited cash, the very cash they need to keep the lights on and pay employees while they try to figure out a plan. They're also acknowledging that this bankruptcy affects pretty much everyone involved. Customers, suppliers, lenders, employees. Everyone's interests are now on the table and the court has to balance all of these. How long will this whole process take? That's a massive question mark. The longer they're in bankruptcy, the more uncertain things become and the harder it is to secure the operating money they need. You can expect others involved in the bankruptcy to potentially object to the company's proposed plans or financing. These objections can drag out the entire process, making it even more costly and complex. Other parties involved in the bankruptcy might file their own motions with the court, which can create additional hurdles and complications for TPI Composites. Ultimately, the outcome of the bankruptcy case is entirely dependent on what the judge decides. Various rulings throughout the process will shape and possibly determine the company's fate. If they get that crucial DIP financing, it will come with strict rules. They have to deliver on those promises or they risk losing that lifeline. The uncertainty of bankruptcy often causes employees, especially the most skilled and key management, to look for more stable opportunities elsewhere. Losing talent during a restructuring is a massive blow. And finally, they're reiterating the consequence of all this. The delisting from Nasdaq and the move to the OTC markets, which is a clear sign of severe financial distress. The report references a press release from August 11, 2025 as Exhibit 99.1. This press release is essentially the official announcement that provides the foundational details of their Chapter 11 filing. And the report is signed off by William E. Seawick, the President and Chief Executive Officer. This confirms that the leadership is aware of and authorizing this significant and frankly very negative filing. So what's the story here? TPI Composites, a player in the growing renewable energy sector, has unfortunately succumbed to financial pressures. The detailed risks outlined in this report paint a grim picture for existing shareholders, with a strong likelihood of equity being wiped out. The company is facing a long and challenging road through Chapter 11, with every step requiring court approval and burdened by high costs. Their future now hinges on their ability to reorganize secure financing under strict conditions and retain essential talent, all while navigating a complex legal landscape. The delisting from Nasdaq is the final stark confirmation of their current financial state. Looking at this from a broader perspective, TPI Composites' situation is a cautionary tale for manufacturing companies, especially those in industries with significant capital expenditure and volatile raw material costs. While the demand for wind energy is strong, the ability to execute profitably on large contracts, especially with global supply chain disruptions and inflation, is incredibly difficult. The company's failure to manage its debt and operational costs effectively in the face of these headwinds has led them here. The key takeaway for investors is incredibly simple. If you own a high-risk situation and the company itself is warning you that you will likely lose your entire investment, for anyone considering investing, this filing is a massive red flag. It's a clear signal to stay away. The company's future as it exists today is in serious jeopardy, and its recovery plan, if successful, will almost certainly leave equity holders with nothing. Alright, that's our breakdown of TPI Composites Chapter 11 filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.